Hi guys, good evening. Let's talk about national income accounting. In national income accounting, we account all the goods and services in a nation as a overall aggregate, as a whole nation. So here, national income accounting, goods and services provide satisfaction to the unlimited wants of individuals. This is achieved through the production process, which also generates income in the economy. This chapter describes the meaning of national income. Next, income meaning. In the economy, we receive different type of income such as wages and salaries. We also receive interest on the capital that we have invested. All such income can be classified into two categories. First, factor income. Factor income means an income derived by the factor of production for services rendered to a production unit is factor income. For production to occur, there are four factors of production. These four factors of production are labor. Labor is physical and mental effort of humans that is used to produce goods and services. Next, workers are remunerated through wages and salaries, which are classified as compensation in national income accounting. So, labor's ki wages and salaries can ఇస్తారు. Next, land. In economics, land refers to all that is freely given to us by nature on, beneath, or above the earth's surface. Those who owned land began charging a fees for the use of their property. This type of payment is called rent, which is money paid to the landowner or landlord. Next, capital. All man-made resources investment used to produce goods and services such as structures on land, machines, equipment, vehicles, stock of materials and so on are considered as capital. Interest is a payment made to the owner of the use of capital. So interest is the payment made to the owner of the use of capital. Next, business ownership. It refers to a person's or group's initiative in starting or organizing a business. No business can be started unless someone takes the initiative. The person who takes the initiative is referred to as an entrepreneur. Profit is the amount of money earned by the entrepreneur. Employee compensation, rent, interest, and profit are thus factor incomes of the factor owners. So, employee compensation, rent, interest, and profit are thus factor incomes of the factor owners. Next, non-factor incomes. For example, non-factors income. Some money revenues are obtained without the use of any production activity. These incomes are known as transfer incomes. Since they consist only of money transfers with no goods or services delivered in exchange for the receipts, these earnings are not counted as part of the national income. So they are non-factor incomes. So non-factor incomes are primarily known as transfer incomes. These transfer incomes comes from the without the use of any productive activity, consist only of no goods or services delivered in exchange, not counted as part of the national income. So only factor incomes are counted as part of the national income. So while counting the national income, only factor incomes are counted. Factor incomes means labor, worker, land, capital, rent, everything. These are the factor incomes. Next, the essentials of economic activities. Every economy has three basic economic activities: production, consumption, and investment. Production is the process of adding value to the existing product. Existing commodities are made more usable during the production process by the combined efforts of production components, increasing their value. Next, consumption. Consumption is the act of using up created products and services to directly satisfy people's individuals and community desires. Next, investment. Investment refers to the portion of production that remains after consumption and is utilized to create tangible assets such as machines, equipment, and materials. It's the part of the process that's employed to make more stuff. It boosts the economy's future productive capacity. So, production, consumption, investments are all intertwined and interconnected processes. These three economic activities are in charge of generating economies income flows. In charge of generating economies income flows. Next, flow and stock. To understand national income, comparative understanding between stock and flows is critical. A stock is a quantity that is measured at a specific point in time, such as at 4 p.m. on March 31st. Stock notions include wealth, population, money supply, etc. It does not have a temporal dimension. A stock means at a specific point at a specific time. It has to be there, that is stock. Flow means a flow is a quantity that is measured over time, such as days, months, or years. It has a time component. Flow themes include national income and population growth. So, flow and stock. Next, circular flow of economy. An economy's main economic activities are production, consumption, and investment. People make transactions between different sectors of the economy while carrying out these economic tasks. Income and spending flow in cyclical pattern as a result of these exchanges. This is referred to as circular flow of money. This is referred to as circular flow of money. So, this is the circular flow of money. Real flow. Households provide enterprises with factor services like land, labor, capital, and entrepreneurship. To meet the needs of the homes, the businesses provide goods and services. Real flow refers to the movement of factor services from households to firms, as well as the flow of goods and services from enterprises to households. So, real flow. Next, money flow. Money flow. Real flow వచ్చేసి movement of factor services from households to firms, as well as the flow of goods and services from enterprises to households. That is real flow. Money flow వచ్చేసి goods and services and factor services are valued in terms of money. In modern economics, firms pay rent for land, wages for labor, interest for capital, and a profit for entrepreneurship to households. Households pay for goods and services provided by firms. Money flow refers to the movement of funds between businesses and households. Firms pay rent for land, wages, interest for capital, profit for entrepreneurship to households. Pay rent for and wages for landship, interest, profit for entrepreneurship. And households pay goods and services provided by firms. Money flow refers to the movement of funds between businesses and households. Money flow refers to the movement of funds between businesses and households. These are money. The circular flow can be seen using the diagram below. The circular flow can be seen using the diagram below. Next, national income related concepts. Domestic territory. Domestic territory can be described as the country's political borders, including its territorial waters, ships, aircrafts, fishing vessels, run by ordinary citizens of the country, and embassies and consulates situated abroad, etc. The terms normal resident and nationals are not interchangeable equivalents. A normal resident is a person who ordinarily resides in a country and has economic center of interest there as well. Nationals such as Indians living in India, foreigners, non-nationals living in India are both considered normal residents. Nationals such as Indians living in India and foreigners, non-nationals living in India are both considered as normal residents. So, ordinary resident of the country, embassies and consulates situated. So, ships, aircraft, vessels run by ordinary citizens of the country and embassies and consulates situated abroad. These all comes under the domestic territory, political territory. Next, intermediate and final goods. Intermediate and final goods. It is vital to comprehend the meaning and distinction between intermediate and final goods in order to comprehend the idea of national income and its related aggregates. Intermediate goods are goods that are intended for either reprocessing or resale. Final goods are goods that are used either for final consumption by customers or for investment by producers. These items do not go through the manufacturing process and are not intended for resale. Bread, butter, biscuits and other consumer goods are examples. The usage of good determines whether it is a final or intermediate good. The cost of intermediate good is not factored into the national income analysis because the value of intermediate goods is included in the value of final goods. Only final goods are considered in the estimate of national income. If it is included in national income, it will create a double counting problem. So, the usage of goods determines whether it is a final or intermediate good. The cost of intermediate goods is not factored into the national income analysis because value of intermediate goods is included in the value of final goods. Only final goods are considered in the estimate of national income. If it is included in national income, it will create a double counting problem. So, while counting the national income, only final goods are taken for the considerations. There is no intermediate goods. Next, what is national and domestic incomes? National and domestic incomes. The net money worth of all final products and services generated by normal residents of a country throughout an accounting year is referred to as national income. Domestic income is the entire factor income earned by a factor of production within a country's domestic territory for a certain accounting year. So, the net money worth of all final products and services generated by a normal resident of a country throughout an accounting year is referred to as national income. Accounting year is referred to as national income. The net money worth of all final goods and services generated by a normal residents of a country throughout an accounting year is referred to as national income. Domestic income is the entire factor income earned by a factor of production within a country's domestic territory for a certain accounting year. domestic income and national income. National income means net money worth of all final products and services generated by normal residents of the country. Domestic income means entire factor income earned by factor of production within the domestic territory. There is no use mechanism. Net factor income from abroad. NFIA. Net factor income from abroad, which is included in national income but excluded from domestic income. So, net factor income from abroad is included in national income. So, while calculating national income, we include the net factor income from abroad. But while calculating the domestic income, we exclude the net factor income from abroad. It is the difference between the two incomes. So while counting the national income, we also take the net factor income from abroad. While counting the domestic incomes, we don't take the net factor income from abroad. We exclude that from the domestic income. So usually the financial year starts from the 1st April to the 31st March next year. So this year 1st April to the next year 31st March next year till then the financial year runs. Yes, salaries, materials, everything. Next, net factor income from abroad. This net factor income from abroad, it is the difference between normal residence income from the rest of the world and equivalent payments paid to non-residents within the domestic area. So, the net factor income from abroad is resident income from the rest of the world minus payments to non-residents within the domestic territory. This is called as net factor income from abroad. So this net factor income from abroad is counted while calculating national income, but it is not taken into consideration while calculating the domestic income. What is the definition of national accounting? National income accounting is a collection of methodologies and principles used by the government to measure production and income, or in other words, a country's economic activity over a certain time period. Next, GDP, gross domestic product. Next, GNP, gross national product. And NNP, net national product. As well as other indicators like personal income and disposable income are used to calculate national income. National income accounting aids in summarizing a country's economic performance. The data generated through national income accounting is used to frame government policy. Sir, GDP, gross domestic product, GNP is gross national product, and NNP is net national product, as well as other indicators like personal income and disposable income are used to calculate national income. National income accounting aids in summarizing a country's economic performance. The data generated through national income accounting is used to frame government policy. Next, Sir Richard Stone is known as the inventor of national income accounting. He studied law at the University of Cambridge before deciding to study economics after being influenced by John Maynard Keynes. So, national income accounting aids in summarizing countries' economic performance, and the data generated through national income accounting is used to frame government policy. Sir Richard Stone is known as the inventor of national income accounting. He studied law at the University of Cambridge before deciding to study economics after being influenced by John Maynard Keynes. So, Sir Richard Stone is known as the inventor of national income accounting. He studied law at the University of Cambridge before deciding to study economics after being influenced by John Maynard Keynes. Sorry.